Welcome back to another episode. Today, we're going to take a closer look at Nvidia and some other semiconductor news impacting the overall AI space. For example, Broadcom just reported earnings and the stock is down after hours. So we're going to take a small look at what's happening there and what they had to share, more importantly, in the AI space, a market where they kind of compete with Nvidia. So let's get to it with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
If you're new here, my name is Jose Najarro, master's in electrical engineer, semiconductor nerd, and check out the links below for a free newsletter and my earnings ebook for the semiconductor market. Now let's look at Nvidia. So the first news I want to cover is we did hear from Nvidia that they mentioned that they did not receive any antitrust files or subpoena from the Department of Justice. And this is pretty important, where I believe it was Tuesday, we kind of heard those news after hours, and it did create kind of a lot of bearish sentiment for the stock. And now we're seeing that at the moment, this seems like fake news. It's almost a little bit like the Blackwell delays, where there were some truth behind it, but not a complete truth. So at the moment, I don't think this is anything investors should worry about. And I've talked about this in my previous episode, and like I mentioned, I kind of talked about some of the points that were made against Nvidia and why I personally wouldn't be worried about it as well. Now, the next thing we have for Nvidia is we did see reports that Nvidia is investing in a Japanese AI company that just did their $100 million funding round. This AI company is called Sakana AI and will work with Nvidia on artificial intelligence research, data centers, and AI community building. So it seems to be a big AI company in Japan that's focusing a lot of things like research and development and also kind of sovereign AI. They do get funding from the overall Japanese government. So I believe Nvidia is actually being really smart and making investments in these AI companies for a few reasons. Obviously, if these companies do well in forms of returns, that could be a nice boost in forms of Nvidia's numbers. But the other thing is Nvidia is getting closer and closer to those that are using its products. So if you want to see where the next iteration of AI is going to go, if you need to see where the next type of AI workload is going to go, what's the next type of AI solution, the best place are going to be the developers and the engineers working in that. So I think by Nvidia making investments in these AI companies, it allows them to see what's going on in the AI community in a very kind of first point of view, where they're able to design the chips that are specialized for that market. And I think that's very, very important, right? Because you can make the best chip in the world, but if that best chip doesn't have any type of use cases, then there's no point in customers buying it. But now if you make the best chip, but also the best chip with the best use cases and kind of optimized for those types of workloads that are coming up in the future, then that definitely gives companies like Nvidia a head start. Over the weekend, Elon Musk did mention that xAI brought their Colossus supercomputer up, which is their 100,000 H100 training cluster online, and it took them about 122 days to do it from start to finish. Elon Musk also mentions that Colossus is the most powerful AI training system in the world. Moreover, it will double in size to 200,000 by adding 50,000 more H200s in a few months. So this is going to be a very, very powerful system. And the reason I believe this is bullish for Nvidia is just showcases the amount of investment needed for these AI players. So obviously, if xAI is going to be investing like this, you have Claude, which is Anthropic, you have ChatGPT, which is OpenAI, you have companies like Sakana that are going to be investing in infrastructure as well. Stability AI, who else do you have? You have companies for like Midjourney, for Runway, and the list goes on and on. So there's a lot of different AI use cases right now, and the training infrastructure that they need are probably going to be very, very huge. So I think that's just a bullish sentiment for the AI space in general. Now, there were some reports on X Daily News that some kind of competitors of xAI are kind of a bit worried. More importantly, it reports that OpenAI CEO Sam Altman, for instance, has told some Microsoft executives that he is concerned that AI could soon have more access to computing power than OpenAI does. And I think that's huge, right? Because now this is OpenAI CEO, if true, is going to be forcing Microsoft to buy and buy more computing power, which obviously bodes well for a company like Nvidia. But we can see this is a very competitive space. Then you have obviously Google, which they do their training on their TPUs, but again, you can continue to see the use cases for AI accelerators. Now, staying here in the AI market, there's no shortage in the AI space right now in forms of money. One of OpenAI's co-founder who left the companies to start their own company just raised $1 billion at, I believe, at a $5 billion valuation for this company that he's starting as SI. So again, you're seeing another big company with a very big valuation coming out and most likely are going to need a lot of infrastructure power. Finally, the last kind of AI, no, I have two more AI news before we look at Broadcom and some other stuff. The CEO of OpenAI Japan just said that AI called GPT Next is coming, which is going to be like GPT-5, and it's expected to be 100 times better than GPT-4. Obviously, more computational power means more AI accelerators. Now, the last type of AI news I want to cover before looking at Broadcom is Tesla. Tesla was up roughly 5%. Main reason is Tesla share gains on plans to launch full self-driving in Europe and China. So obviously, we don't know. Elon can say one thing in forms of when the actual time frame is going to be for that. But regardless on when it's going to happen, I do believe it's more going to be it's no longer an if, it's more of a when. And things like that obviously are going to need strong computational power. So again, we see a lot of more use cases in AI continue to evolve and kind of give more of this bullish sentiment that the AI market is definitely heading in the right direction. Now, for those that are familiar, right, Nvidia right now doesn't have it has a demand issue, but also has a supply issue. They have actually they don't have a demand issue. The demand issue is that they don't have enough supply to cover it. And one of the main reasons that they don't have enough supply to cover it is because of CoWoS capacity. And CoWoS is a form of advanced packaging. At a recent event, TSMC mentions that they plan rapid CoWoS expansion through 2026 in response to client demand. They see between 2022 to 2026 a 50% annual compounded growth rate in CoWoS capacity, and this high-speed expansion is continuing at least until 2026. So obviously that means that Nvidia will be able to provide more chips, and more chips means more revenue. Again, this is kind of already known, but it's good to kind of get reinformation that this is where the market is going, that TSMC is increasing that CoWoS capacity because of high demand, because it means Nvidia is most likely making a lot of orders. Now, the final news I want to take a closer look at is Broadcom, right? Broadcom on after hours is down roughly 6.7%. The stock is sitting at about $142. So later today or tomorrow, I will drop more of a Broadcom earnings. But this is probably a great segue. Check out my ebook. I have an ebook that talks about quarter earnings, and this will be coming up in the next update within the next few days. Special code YouTube will get you $10 off. The link is down below. And also there's my free Substack newsletter. So make sure to check that out. Well, anyways, Broadcom right now is down roughly it's down to $142. We can see year to date, this kind of did peak at roughly 182. So these 140 levels were kind of those bottom levels that we saw when we kind of had that dip early in August. So from that peak, the stock is down roughly 20%. So I think Broadcom, which we're going to see, has a mixture of three markets for those that are not familiar. Two main markets. It has their software side and their semiconductor side. Their semiconductor side is pretty much broken down into two markets, non-AI and AI. So very similar to Marvell, every kind of market outside of AI is kind of either pretty low versus year-over-year basis. So right now, Broadcom is mainly having the benefactor of its acquisition of VMware and the huge growth in AI accelerators. So I thought I wanted to share some points of what the CEO and some Q&A sessions that kind of correlate with Nvidia. So Tan, which is the CEO of Broadcom, mentioned that AI revenue continues to grow strongly. With Broadcom, we can see another proof of the point that AI market continues to grow. Now, another thing that they mentioned is that the main growth is this was again driven by strong demand from hyperscalers for both AI networking and on custom AI accelerators. As you know, our hyperscale customers continue to scale up and scale out their AI clusters. Custom AI accelerators grew 3.5% year over year. So a lot of these big cloud server providers, these hyperscalers, are designing their own AI chips, and they're going to Broadcom to be able to do that. But the kind of number is nowhere near, and a lot of people kind of talk about Broadcom as this huge competitor to Nvidia. And we know Nvidia GPUs are used for various workloads, not just one type of AI accelerator load. And we know that Nvidia is making multi-billion dollars, right? Over $30 billion in revenue, $30 billion in revenue this most recent quarter, and over 20 of that comes from data center market. For here, per quarter. For Broadcom, though, the AI demand they had roughly for this quarter was about $3.1 billion. And that's not just AI accelerators, that's AI accelerators and their networking side. Now they mentioned for quarter four, that's expected to grow 10% to over $3.5 billion. And we're going to see in a bit that they believe this is about 2/3 AI accelerator, 1/3 networking. So out of that $3.5 billion, they're only really seeing about 2 point something billion in AI accelerators. You can see how this is not much of a competition to Nvidia, in my opinion. Now, luckily for them, because of this AI revenue, they're able to guide their AI revenue for the full year from 11 billions up to $12 billion. The other thing that they did mention, though, is their gross margins for their semiconductor solutions segment was down 270 basis points year on year, driven primarily by higher mix of custom AI accelerators. So it seems for them, unlike for Nvidia sells their GPUs at a very strong margins, and Broadcom, unfortunately, their AI accelerators are actually hurting their margins a nice amount versus a year ago. So again, very interesting there. Now, some other things that Tan mentions is this might be a little bit worrisome for the Nvidia space, as he just mentions that, hey, look, right now AI compute is needed so much that these hyperscale players are continuing to invest money into ASIC solutions, or how they call it XPUs, which is custom silicon. So that's something that could be seen as a bearish flag for Nvidia. But based on the numbers that we're seeing, it seems like they're just trying to offset some of that computational power. At the end of the day, Nvidia's GPUs are still needed because obviously they're used for a variety of workload, and these hyperscale players need a variety of use cases for their investments. So obviously Broadcom can definitely grow in this space, but I don't believe it's a true competitor to Nvidia just yet. Obviously that may move in the numbers, but $12 billion in total revenue for AI per year. And here I actually have the numbers. I think I'm going to talk about it in my other video. Out of that $12 billion, they mentioned roughly, where do I have it here? Roughly 2/3 in compute and 1/3 in networking. So out of $12 billion per year, that means about $8 billion is coming from AI accelerators. That's obviously better than AMD, but Nvidia is doing what, over $100 billion in data center revenue alone for the next for this fiscal year expected. So we can see the big difference there. The other thing that I thought was pretty interesting is where Nvidia, and this is one that really kind of, I believe maybe why the stock is down right now, is Nvidia is right now supply constrained. Unfortunately, they can't keep up with the demand. And then the analyst kind of asked the CEO, what is your main issue right now? Are you supply constrained? Could you make more money if you had more supply? And Tan, the CEO, mentions that, hey, look, right now we can meet those upsides. So it seems like this company is not supply constrained. They have demand that they're able to provide, which is obviously good. You always want to be able to do that, but investors would like it more as in the Nvidia case, where the issue is actually the supply side, because it means you probably have a very long viewpoint of where the market is going to go. So again, I'll probably do more in depth in Broadcom later today or tomorrow, but I hope that shared a lot of great information. And like always, thank you for the support. Take care, have a good day, and see you next time.